The cost of living in Canada fell a lot last month. Inflation is barely above zero. That's its lowest level in 14 years. And after a series of short-term extensions, Indian markets continued on a hot streak today. The dollar gained more value against the U.S. dollar. The Toronto Stock Exchange gained 130 more points. The Dow Jones of New York, though, fell by 52.
Well, the Greek banks, as far as Canada is concerned, have exited.
Okay.
So I think they chose a good time in America. It was early 2006. And they're focusing their attention to Southeastern Europe. Now, I don't fully understand your question. Is it about the Greek banks, how they're doing?
It's a way to introduce you into the conversation.
However convoluted it might be.
Questions. I don't know which one to respond to.
Well, and also, you're very good at calling the markets.
Yeah.
Give us your view.
But I'll try to do both. In terms of GE Capital, one of the weaknesses of the Canadian banking system is that it's overly regulated. And I can even say it at this time after the financial debacle. I've been observing as being a director in the past and going to conferences, I find that it's very hard for investors to set up a new bank in Canada. It has become almost impossible, which means they've created very big barriers that are supporting the existing banks, and that is always not good for the long-term health of an economy because it doesn't allow for the injection of sufficient competition. And this is what leaves the room open for alternative financial institutions or non-bank financial intermediaries like GE to step into the picture. In retrospect, when we look at what happened in the United States, we can criticize the securitization that took place in the financial market. We can criticize the countrywide financials and all those other institutions that were set up to generate funding for the industry. But one of the fact remains is that the existing banking system was too regulated, just like the airline industry was before deregulation in the 90s. So it was not really serving the needs of the economy. So because of this mismatch, other financial institutions grew up to meet the need. The problem we can put on the greedy bankers, yes, to a considerable degree, but I think the majority of the responsibility lay with the politicians in Congress, in that they did not revise the rules of the financial system in order to encompass all the new entrants that had entered the industry. So I'm very happy that GE is doing well, and I want them to continue to do well, because I don't think regular banks know how to analyze manufacturing risk. I mean, I think they've gotten out of that for a long time now. And one comment is the Greek banks have fared very, very well, despite a lot of bad press they've received in Europe the last few months. For a number of reasons. First, their exposure to subprime was minimal because they had a lot of virgin markets in the Balkans and to make money in. Secondly, the total exposure of the banking system, I did a calculation of the total bank assets compared to the GDP of Greece, and it was 150%, which was the same as the United States, and much less than Britain or Austria. Or certainly much less than Ireland, not to mention Iceland. So overall, the exposure has been less, and that exposure has been also mitigated by now the IMF that has stepped in to lend money to countries like Bulgaria, Romania, Serbia, and Turkey soon, given the big exposure that Greek banks have in that country.
Thank you.